Fintech Chatter podcast, brought to you by Tier 1 People, the leaders in executive search for fintech ventures.
Hello and welcome to Fintech Chatter, the show where I connect with fintech leaders for a bit of a chat. I'm your host Dexter Cousins, and today's guest is Robert Kassis, co-founder of Digizoo. They're reinventing the way banks tackle digital transformation, bringing to life innovative digital experiences for all banks, large and small. Robert and the team are behind some of Australia's most innovative banking solutions, including 86400, Vault Bank, Afterpay Money, and they've even helped establish banks like Great Northern. They're one of Australian fintech's best kept secrets and intentionally fly under the radar. So I'm delighted Robert agreed to catch up with me in Newcastle in a rare and exclusive interview. Robert and I talk about the current state of fintech, where the industry goes from here, and how he and the team at Digizoo have evolved from a services business to a product business. But before I chat to Robert, if you're new to the show, follow us wherever you listen to podcasts and leave us a review. And if you're coming back, please give the show a share on your socials, and thanks so much for your support. We don't advertise or seek sponsors, so by sharing, you not only make me feel valued, but it also helps me book great guests like Robert. Robert, welcome to the show.
Thank you, Dexter, and it's nice to be up here in Newcastle.
Yeah, thanks for making the trip up. Great to be doing this from my office for a change rather than somebody else's. Look, and also thank you for coming on the show. As somebody who's been heavily involved in fintech, I think when we look at the neobanking space in particular, there's been two notable successes, 86400 and Up. And we know Ferocia, kind of had a strong link with Up. What a lot of people might not know is the role that Digizoo played in the success of 86400, as well as being behind some other great work that's been happening in the Australian financial services and fintech space. So first of all, I'm kind of really pleased to be doing what I feel is a bit of a great reveal of one of the unsung heroes who, you kind of haven't taken the limelight, and purposefully so. And so today, I kind of really I'm pleased to be given the opportunity to present to the network Digizoo and some of the great work that you do, but also talk about your plans for the future as well, Robert.
Yeah, thank you. Yeah, I think that stems from us having an engineering background and not having a sales background, or not seeking large amounts of capital as a lot of our peers are trying to do. So for us, the success through proof and delivery and evidence base is fundamental to where our business is going today. So it's by design that we haven't put ourselves out there, and we haven't tried to equate ourselves to some of the other high flyers who we're quite proud of and always happy to talk to. We love seeing success stories like Up and the likes of Ferocia and what they've done. In recent times, there's Constantinople that are also doing quite well, and we're sort of happy to be associated with them early on and just give them a little bit of steer in some areas. But that's the sort of role that we play, and we don't seek the limelight. I think our goal is and sort of aligned with what our target market is as well, where we're trying to remain humble and stay close to the ground and solve real-world problems rather than sell a vision that is probably beyond capability for a lot of the organisations that we're trying to deal with.
So what is that big problem that you solve, then?
That's a great question, and it's snuck up on us. I think we went along the hype curve when the neobanks and the digital banks
we all did.
Yeah, and to be honest, it was a great time of learning. We picked up a lot of knowledge from building a bank from scratch at 86400. We helped quite substantially at Vault as well. And, the technology isn't always the problem in those places. Sometimes it's the business model, and sometimes it's just the time for those things to have occurred. So for us, we took that, and we started out as a services company, and our history goes back before banking. many of us and our senior people all work together actually in energy, in smart cities and smart grid. And so it's a...
I thought that was new, Robert.
It wasn't just me. It's actually half of our early employees came from that team that we did a lot of innovation work. And what we learned was to do a lot with less. And there's no playbook. There was no, this is how we've done it before. We had to break new ground. We had to deal with problems of scale that we still don't see in the Australian banking market today. It's the volume of data without the tooling. So we took that, and then when energy became privatised and governments sort of let it go, we thought we wanted to continue this innovation work. And so we all moved across to Westpac, of all places, and we managed to get ourselves onto a digital innovation project there. And that really set the foundations for us to learn the ins and outs of banking. And not just banking, but there was an institutional element to it as well, which was quite interesting for us because it had a whole other layer of complexity that was underserviced for many years because, the large corporate clients just expect the same as well. So trying to bring those innovations and then having a services business led us to a point where after about 6 years or so, we said, well, what next? We had options to continue to scale it and to be a pump and dump type organisation, which, to be honest, from a financial perspective, is the safest and easiest choice to make. But did we make that choice? No, it's not us. It's our DNA was with having gained all of this knowledge, helping some large fintechs, the likes of Afterpay, Hi Lee Hatton, one of your former guests as well, and to how do we use that knowledge? How do we take this opportunity at this point in time that we don't just make it about the money, but we actually do something that will be remembered for, or that we can change the way the industry works. So we started looking at what it would take to productize our knowledge, which is fairly significant because it's not a shard of knowledge. When you build a bank from scratch, you have to ask every question. It's not just, I need to solve this problem at a point in time for a regulator. So when you get to that point, you understand why you do it, and even if you have to do it. So you ask the more difficult questions. So we took that on as, how do we productize that and give it to people who haven't had the benefit of being in the right place at the right time and having those experiences, and give it to those clients. And that's where we are today. We'll talk a little bit more about our product.
Well, that's kind of what I wanted to ask you about, because that one of the big challenges is, how do you productize a product, right? A service, a service is a service.
Yeah.
A product is a product. What was the realization point of, hey, if we want to scale this, we're going to have to productize the business? Yeah,
so, and it hasn't been easy to arrive at where we have today. What we did initially was almost copy-paste what we'd done for other banks, like Greater Bank here in Newcastle, et cetera, where we built a new platform from scratch. We had to integrate it with core, build new digital experiences on the front of that, integrate with loan origination systems. All of those things were hard, but could we and did we have the runway and the scale to be able to achieve that? We didn't. And I think we built apps, we built a demo, we built out the platform. Next step became, how do we get that platform, regulatory approved and all of that? And we just, not wanting to take finance from venture capitalists, it's been a huge driver for us. Our values don't align with that in the early days until we get to a certain position.
Right.
And this is a really interesting proposition. I've known a few other founders who've taken money and had their vision compromised because of the need for rapid return on investment. And we were prepared to pay the long game. So we see our services business as funding our foray into product.
Right.
And we're doing that. And I know one of my friends and your other guest, Damir, keeps saying to me, I've never seen a company successfully go from services to product. And, Demir, I'm taking up that challenge. So, I think we can, and it's just about being a little bit more patient and not aiming too high from the start. And that's where we are today. We've sort of developed a product based on what people are coming to us for. Last year we tried to present our product as a digital experience, and what people were looking at was, it's a cool app, and we can white label it and all of that, but it's not really moving the needle or solving any substantial problem that needs to be solved today. And what we found was people kept coming back to us and as some sort of a connector between products that they wanted to buy, which were big and complex and global products, and then how they bridge that chasm between the future state that they want to be in and this vision that's being sold to them by often global companies or large Australian companies, and with their old systems that they're sort of stuck with today. And those vendors, low-cost vendors, they've done the job for a lot of years, but they're not able to innovate or connect fast enough to the new world, the fintechs that the banks are all wanting. So, and we had 5 or 6 of them come to us a few years ago now, and they said, we really want to build an API layer in the middle. And so they came at it with a technology solution rather than thinking, how can we solve this? And thinking that just put an API gateway in the middle will solve all your problems. But of course it doesn't. There's a lot of integration work, which is very localized and customized. And there's a few old core bankings now that exist, and those companies are starting to be a little bit shaky in terms of financial viability.
We've seen, the kind of banking as a service, hype. I've not heard that term in about 18 months now. It kind of shifted, I think, 2 years back to embedded finance. Now we've got, kind of banking in a box. That term's being bandied around. We've seen, you mentioned that, services model moving to product. I think 11FS attempted that through Foundry, and that kind of hit challenges as well. We've seen here locally, perhaps Shape do the best stab at that model, but they started out as a neobank as well, right? So what do you think is kind of, what is actually the thing that needs to be built? Because we keep kind of moving every 18 months, 2 years on, this is the next thing, this is the next thing.
And we've been on that journey. We're heavily involved with Westpac's banking as a service before they gave up on that concept. And the reason people do come to us is, how do we connect the existing systems? Often people feel like they're shackled to those systems, and they want to get over to the next peak, but how to get there is a challenge. And what we've done is we've productized connectors. So we have a standards-based layer in the middle that everything maps to, basically, and allows us to build connectors to some of these older systems. And we're starting small. We're not saying we can connect everything to everything. And the experience that we got from places like 86400, building against those old core bankings, really puts us in a good position, and we have the knowledge required to I wouldn't say convert, but to allow connectivity to those systems to enable more fintech integration and integration with newer digital experiences. And that's really what people come to us with. Data action. Yes, we've done that a few times now. And that's the first problem to solve. I think it's very difficult for a CEO or a CIO to say, I'm going to change my core banking. It's an absolute killer. What we're saying is, you don't have to, you can just enable other things to connect to it. And that's really what we're about. And we're not trying to be the whole banking platform for everyone, but we're trying to enable things without having to bet the bank on this sort of stuff.
So I caught up a couple of weeks back to record an episode with Stevie Ann DeVico of Beyond Bank. We talk a lot in that episode about the challenges for the community banks and the kind of mid-sized and smaller banks and credit unions here in Australia, and the likelihood of consolidation, but also I think that, perhaps the job that fintech has done over this last 10 years in trying to serve that market, I think they've kind of been off point to a large degree. They kind of don't seem to anticipate or be able to empathize with the fact that they don't have a lot of money.
Yeah.
They don't have the resources that a bank does. And there's a lot riding on the decisions that they make, as in, people lose jobs if it doesn't work out.
It literally could be the last throw of the dice for some of these guys. I mean, regulators are pushing hard for more merger and consolidation of that market. And I think it's well known. I think one of the most humbling things is to take a drive out to some of these. I was up in Lismore a couple of months ago, and just to see the flood levels in town, it actually changed their business model and their product mix, and they were able to offer new types of product and loans that is really localized thing. And they've gone back to this serving their community philosophy, which I think is brilliant because that's their competitive advantage over the big four banks in town, right? So I do love those trips to regional Australia, and I think you really get to see it's very different from going to CBA or Westpac and having harbour views from level 32, just how difficult it is and how you have to do more with less. And I feel, and I think we all feel, that our company is better aligned to the values of those organisations, and we can bring more value to those organisations than we can to a CBA.
Yeah. And I think that, the thing that I really love about that example that you've given is, if I look at the initial excitement that I had around fintech, so I truly believed, not only could it be used as a force for good, but it would enable smaller businesses to get closer to the customer and to deliver products that they actually need. I think one of the frustrations that I'd felt with the industry was, a lot of the innovation we've talked about, it was all back-end stuff that the customer never saw. I was on the phone, I applied for a credit card yesterday with NAB, right? I'm a customer, have been for years. The application fails, as I get to the end, call this number. I'm on hold for 25 minutes, 30 minutes, right? Then I speak to someone. Then they're like, start the application again. Why is it always on me to fix the problems with your infrastructure systems and everything else, right? And then you go through it and asking me for information that they've already got. And you just kind of, you despair. You think, what's, is this all just hot air that we're blowing? And all of the money that's been spent in the last decade and all of these promises and all of this, the aftermath of the Royal Commission. And yet still businesses are just stuck at this point where they can't get systems to talk to each other. They can't get things to work. Nobody's looking at the front end and kind of looking at the experience that a customer has, despite them having millions and millions of dollars every year paid on CX and kind of this and that. And
I think you've actually nailed the point here in that most software companies, particularly the globals, are incentivized to sell their software. So here's our solution. How can we fit your problem? Whereas we've taken the alternative approach. We've sort of seen what problems need to be fixed, and then we've built the software that we feel will solve the problem. It's not a silver bullet. There's no magic, but there's if you can go a long way to getting them there and de-risking that, because the risk with them is a technology risk at the moment. And I would say every mutual bank has a technology risk from their core banking vendor on their risk register at board level. How can we help to mitigate that? And our goal is let's just unlock you and give you the ability to have options. It doesn't sound like much, but it's a place where you can start and then get to the next point and then make the appropriate decision. And they may be heading into merger territory. We're often not aware of those conversations when we're having conversations with them. They're highly confidential, but the point is the position of when we do get to that point, then we've got more, we've got different options that we'll be considering. And I think we're building a product for the industry as it stands today, which is options for the board and the C levels. We're technologists at heart, but we've learned to not speak about it from a technology solves everything type situation.
I think it's an interesting point that you make, because I think it's one of the things that I say to any software sales business is that, particularly when I get new ideas pitched to me, is that, the banking executive is way more likely to invest in a solution that keeps them out of jail than a solution that will win customers or increase profits.
Yeah, exactly. Yeah, certainly compliance types of situations, and I think not being overly ambitious. And the biggest thing for us that we've learned is to narrow our focus. So whilst we've done the end-to-end platform builds, today we've used that knowledge to really narrow down to the connectors, which are the current hot point for a lot of the mutual sector. One of the vendors is currently not in a financially strong position. Everyone knows that they're actively on the market. The other vendor has just been not the most responsive over the years. And there's a frustration because they see opportunities working with fintechs. How do they get access and unlock that core banking to allow them to do those things? And it's a really narrow problem, and I don't think global companies coming in can address it. To be honest, a few of the global companies come to us and say, we want to sell our solution, but they won't buy it because they don't know how to plug it into their world. And fundamentally, that's our problem, that we're really good at. And we've just sort of taken a good hard look at ourselves and said, let's just narrow it, let's make it achievable. And that sort of perspective comes from a position of we're self-funding everything. So, we don't have the tens of millions being invested annually to build a product for a particular purpose. We make our revenue from our services, and all profits go back in to these products.
I think it's a smart strategy, Robert, and I say that because I think over this last 6-7 years, every conversation that I've had with whether they're a banking exec or they're a founder of a startup, they've all got the same dilemma, right? Which is what we're building even going to be relevant in 12 months' time? And that whole thing around interoperability, I think it's critical, right? Particularly as we've got quantum computing on the horizon. We don't know what's going to happen with digital assets, right? We don't know what's going to happen with payments, right? We're kind of seeing, that we're looking at things like cybersecurity and the challenges around that. So there's a lot of unknowns, and we've seen with the NBN, when you kind of put all your cards into one technology solution, and you get it wrong, it's
technology. It's really hard to say, but technology is fickle, right? It's fashion. Each year it changes, and we were talking about
embedded finance.
And what I'm starting to think about is what's Gen AI going to do for this? And I'm not just getting onto the Gen AI bandwagon.
No, look, I think, and I'm one who's tried to stay away from it as well. And it was interesting. I recorded a podcast with somebody who actually is using AI, and it's a cornerstone of their business. And we got 30 minutes in before we mentioned AI, right? Wow. So, so I think the people who are serious about it, kind of are seeing it as, hey, look, this is the thing that's going to enable us to scale, rapidly. And, these are the things that we can use to kind of, be innovative. But it's not hey, we're an AI business. Exactly. Hey, we're solving a property problem or a banking problem. But, AI is a great tool to help us do that faster and at scale.
Yeah. And I do think that it's a really good tool, but what it's going to do to the job market and people's careers, and people need to be thinking, how can I make myself AI proof in many ways? And, rather than fight it, you've got to think, how do I sort of, pump myself up with this and make it?
I was actually on Ausbiz TV 3 years ago making this point, right? And they brought me on because it was like, greatest jobs data ever. Yeah. And I was making a point of saying, look, there's something on the horizon that people need to be aware of, and it's AI. And banks, yes, they've brought jobs onshore, but those people are training AI systems right now, which is going to make them kind of redundant, right? And it's not like offshoring where if a job goes offshore and it doesn't quite work out, they bring it back onshore. once AI's in there, the job's gone, right? And so to your point, like, how do you make yourself AI proof?
Yeah, if you're doing a job that's deep rather than wide, I think you're more at risk because AI can be trained on that. But if you're able to understand the broader context of your job and you're multifaceted in many ways, then you're the one that's prompting the AI. It does the detailed stuff well, but someone has to oversee and make sure it's doing it in the right way. And we're using tools like that now to try to communicate and bring the depths to the surface, create visualizations that allow people to do it. I'll save that for the end when you say what's exciting in your world.
We will cover that. But on that point around what you talked about, and you did touch on this earlier as well in, I think, one of the I guess the kind of secret sources of Digizoo. I was speaking with a bank CEO a couple of weeks back. We caught up for a coffee, and he was lamenting, I guess, from a talent perspective, the lack of people in banking who really understood banking. And we kind of looked back and said, hey, look, this is now what we're seeing are the impacts of what happened in 2008 and GFC. And all of a sudden, kind of McKinsey came in, changed the model, and everybody moved all the back-end processing stuff and entry-level jobs and the stuff that you would give to graduates all went offshore. And what that did was, this person, when they started in, treasury, then they moved into credit, and then they moved into branch, on the desk, and and kind of they got to see the whole bank, and they've been 5 years in banking, they understood everything about banking, right? Pretty much everything, everything that you needed to know about it. Now, to your point, people are kind of an inch wide and a mile deep. And they don't understand even what they're doing, how that impacts the person sat next to them, right? Or let alone the customer. It's like
This stuff really, and having kids who are about to enter the job market, I think about this a lot, and I think we had those rotations when we were young, and we were able to understand the business, and the employers weren't so casualized and contract driven and deeply focused. So now, I think in the early parts of the career, people are being hired to do a technology skill. And certainly when they're younger, a lot of people are identifying themselves with a technology. So I'm an AWS certified engineer. And that's always been there. But I think it's the size and scale of those global multinationals means that people are building their career around a technology, which is quite short-sighted. And we've seen how fickle that can be. They do change quickly. There's all sorts of influences, macro influences. So
I just remember recruiting around about, kind of when we had Sarbanes-Oxley come up, right? And people who for 2 years made a killing as a SOX consultant. And then never worked again. So
in our industry, I think it's important you reinvent yourself at least once every 5 years, and you've got to recognise that that's always happening. Just as a startup has to keep adapting to the situation. I mean, we were doing neobanks and banking as a service. We haven't formally done an embedded finance, but these are waves that are really just evolutions of technology with a different hype curve attached. So I think it's important for people to recognise that you actually have to be trying to read the tea leaves for your career by watching the industry.
There's been some really impressive talent that you've attracted into the business, and they've gone on and done other things as well. What's your approach to talent, and kind of how do you see yourself? As you kind of a bit like the kind of the breeding ground for talent. You take a risk on people, or do you try and get the finished product?
I don't want you to plunder my team, but I think it's just an approach to people. I have a philosophy in that good people aren't there when you want to flick a switch. So often we will talk to someone for years and maintain a conversation and a relationship. And when it's time for them and the time works for you, that's when it works best. And I'm not going to push someone to leave a job that they're really happy with, because even if they come to us, there's a risk that they may not be happy in the way that we go about things or our market, or there were things about flexibility about their other jobs. So you can't take that risk. Both of you have to be ready for it.
Yeah.
And also what we found is, as we've evolved as a business, there are people who are there in the early days who say, yeah, I like the way the business used to be as a services company. I like to just focus on technology. So the neurodiverse people are like that. They're really comfortable in that, understanding the technology deeply. So there is an evolution, and it's not an acrimonious. It's like, oh, I'm really happy for you. I'm glad you're going there. I think it's a great opportunity to do what you want to do, because it may not be so well aligned to what we want to do. And I think that genuine understanding of people's situations and what their needs are is something that people can see that there's an authenticity about it. I'm not looking to retain purely for our benefit. I want to retain people because they're happy, and if they're unhappy and we can't make them happy because we've gone in different directions, that's okay. I don't feel guilty about that. And the person that I've learned most from outgrew us very quickly, but in the short time, like 18 months that he was with us, he probably changed my perspective on so many things, and really allowed me to think about things from a banker's perspective.
Yeah.
But was I sad when he left? Yes. But it was time. Like we weren't going to the right places for where he wanted to be.
Yeah.
Yeah.
What have you learned about yourself as a leader as the business has grown? How many people are you now?
We're almost 60 people.
Wow.
But we've been fairly stable. Our goal is not to grow for the sake of growing. It's growing our business enough to support our product. We want to stay lean. We don't want to be hundreds of people. We've deliberately not gone too far outside of Sydney and now Newcastle, because it's hard to manage a business if you're fragmented.
Yeah.
Particularly people and vision. So we're really trying to narrow focus and do what we do really well. So my role in the business has changed. It's been really hard for me to let go from having technology oversight. I'm lucky in that Jefferson, my co-founder, has a technology brain that is immense. Like, he can pull together solutions and technology way better than I ever could. And so he takes that side of the business now. Don't get me wrong, I still love to dabble in all of that, but I recognise my shortcomings there. And I think one of the things I'm recognising with new hires is we have huge gaps, having both a similar background in technology and our contacts. I mean, we've been working together for over 20 years. Yeah. And a lot of our senior team have as well. So we're looking for people that are bringing things to plug gaps. Right.
So what you mentioned, going from a services to a product style business, what are some of the gaps that you've kind of recognized that you've had to plug?
Yeah, this is really important. We have a chief product officer now, Sarah. Hi, Sarah. She's amazing because she is pretty much giving us direction for the business based on what we need to achieve the product market fit. And we previously used to approach things with a technology focus, like other tech services vendors. Right? Yeah. So having that alternate mindset has really allowed us to shift focus, and it's probably our most strategic hire. And she also had a background in banking and payments, but really has immersed herself in understanding directions as well, and trying to keep abreast of that. But at the same point, challenging us, are we just technology biased all the time?
What about that challenge of, as a services business, you're there to deliver for a customer, and you want to build the right solution and you want to get it right. But at the end of the day, you're directed by what they're asking you to build. Yeah. What's it been like to actually build something that you're then going to go out to market and ask people to buy?
Yeah, that has been the biggest challenge of going from services, because you're right, you're under direction from the customer who just wants to tick boxes. Yeah. They've got deliveries, they've got budgets, and it may not align with what we're trying to do. We said to ourselves, for our product development, we invested, and we did that last year. It was a really good time because the market was tight, and the industry was all struggling with projects. The Big Four had shut down all significant projects. So it was a real squeeze. So we saw that as an opportunity because we'd been squirreling away funds and we put it all into the product. And what we realised is we can't get to the end game on our own. We could either take funding, which I spoke about earlier, is not the option that we want to go with, not in the early days anyway, or we could partner with a bank who had similar vision for what we were trying to do. And we're on the cusp of finalising a couple of things like that where it's a true partnership with these banks. And we do stuff beyond what we would want to do in the product, but we also achieve what we want to do in the product. And we're prepared to do that basically for sweat equity to achieve our product goals and to not have to compromise where we're going.
And so for you, kind of what is the key? Is it retaining control, or is it kind of, sailing off into the sunset with a luxury yacht, or?
No. So I'm in a fortunate position late in my career. The money's not my big motivator. As I said, we would have just stayed with services, low risk, high money. But for me, it's actually about solving the problem. And I genuinely feel like I belong to that mutual sector when I go in there.
Yeah.
The furniture's from the 70s. They haven't got the big bucks to throw around. So the challenge of those who are serving their communities and their members is a really big one.
Yeah.
And I'd hate to see a world where all we have is Big Four type banks or global institutions, because that mutual sector is doing some great things. And we saw that up in Lismore with the floods and how they serve their community, their loans and offering people loans to rebuild, but no payments for 2 years. Those sorts of things are really differentiating. Otherwise, then you're just selling cards and loans and it's very generic. And so, for us, I think it is important that we identify with that sector. And so we don't actively chase Big Four type banks. They do some interesting projects. One of the Big Four, we did a complex project with on entitlements, etc. And that was really interesting. And what we did was we brought our knowledge into that and helped them to try to change. But then they're driven by budget cycles, etc. And they weren't prepared to change quick enough for us. So that's sort of come to an end. But we've accumulated more knowledge on what needs to be done. And that's how we take it. That's why I say that it's about the long game.
Yeah. So if we look 86-400 Bolt, I guess, Afterpay's version of Cash App that then got...
Well, Money by Afterpay it was.
Money by Afterpay, which, obviously then the takeover kind of, with Cash App made that kind of put that project kind of down there. Yeah.
And then they tried to bring in consumer lending. They were going to bring it into Australia. We helped them launch it in the US it's funny, we launched in the US as a trial market, and then it was much more difficult to come into the regulated environment in Australia. And of course, the shifting sands. Now they've just canned it last week.
So you've kind of been right at the beginning of the whole kind of fintech innovation wave. We definitely have entered a very different period now. What do you see as the big opportunity in fintech?
It's funny because we don't see ourselves as a fintech. We enable fintech, but I see, and I don't want to use the word embedded finance. I know you have a slight aversion to that, but
I'm not. I think what I'm kind of it's like what's like you. We're very similar minded, right? It's like let's just talk about the problem that you're solving. Yeah. Right? Let's not dress it up.
So I think the next level, and we're seeing a lot of it. We saw Aldi launch insurance last week, right? So there's very real opportunities to share each other's customers for distribution purposes, but are there technology companies that can enable that? How can a bank allow, particularly if it's a regional bank and they want to enable a large regional business to serve their members better, how can they let them plug into those systems? And so to me, the fintechs are there. The banks have a desire to use them. but computer says no when it comes to how they plug into their system. It's really hard. Often they don't have, the banks in regional areas don't have the capacity of technical capability internally to make those projects work. And they're time sensitive. So if you leave it for too long, the opportunity goes away.
Yeah. We're coming to a wrap, but before we do, have you got any big announcements to make or anything kind of exciting we can expect from Digizoo in the next 12 months?
Watch me squirm in my chair. There's a few things about to come up. I think there's a common problem, it's a challenge in the mutual sector. And we're about to announce a partnership with one of the banks that we see as quite visionary and really wanting to do it for the right reasons, to enable their peers as well and to share some of the costs of the technology and the integration. And I think that works well for the sector as a whole.
Yeah.
And there's a lot of repeatability in the sector. You know, the very nature of not having a lot of money means that they've all had to be on one system. It's not heavily customized. So the solution that ARC provides and the connectors there, I think will be very repeatable across a number of banks. And I think that excites me because, you know, there's probably 50 or 60 who are wondering how they're going to take the next step.
Yeah.
And I think fintech can help to differentiate them once they get that connectivity sorted.
Yeah.
Because ultimately they're becoming brands that are differentiated around their community or their industry. And that is the mutual sector.
So correct me if I'm wrong here, but my kind of understanding of 86-400 and the Cuscal investing in that was essentially the bigger kind of plan would be to have a solution like the one that you've just mentioned.
It was,
Do you feel like you've come full circle now?
It has, and I think, I'm being very careful here with what I say, but the initial plan for 86-400 was to provide a white label banking capability for those to have digital offerings. I think it's more than that now. I think those digital offerings are going to be increasingly complex. It's not good enough to just do the basic banking anymore. And even loan origination now, there's really good fintechs like Nemo, et cetera, that are popping up and doing that. How do you plug that in? How do you work with the financial product owners? That's the real opportunity.
Look, and this, what's interesting, if I look at a lot of the work that I'm doing now, it's all around the complexity around partnerships and making them work.
Yeah.
And the technology bit, that's just part of the problem. So if you can fix that bit, it means that you can then focus on all of the other stuff, which is typically the human stuff, which is the relationships and the motivations and the kind of politics and the, kind of getting alignment and all of those things.
Yeah, I think partnerships is the key for us. We don't have the funding runway to do it. So we have to find a partner who doesn't see us as a competitor. And I think narrowing the focus has allowed that. There's one particular global vendor that we've worked with for many years, but a couple of years ago, they started to see us as a competitor. This year, we've just reconnected with them and we're talking to them about enabling their product now in other places. And so I think it's really important that you don't overdo the partnerships. It's not a logo to put on your website. Yeah. There has to be something in it for both of you. Yeah. And that's how we're viewing it. We're being highly selective. It also then can potentially divert you and distract you. And we're really conscious of keeping our focus on who our customer and market are rather than our technology partners or business partners.
Yeah, and that's it. There's always different motivations, right? And it's you're kind of almost putting your destiny in somebody else's hands oftentimes with partnerships.
Particularly if you're partnering with large global companies. Yeah. It's really hard to try to wag the dog from that position.
We get some amazing talent listening to this podcast, Robert. If anybody's listening, they're interested in the work that Digizoo does and want to find out more about careers, where's the best place for them to head?
I think if you look at our website, digizoo.com.au, or reach out on LinkedIn to myself or Bonnie, who's our people and culture person. Obviously, we're still relatively small, so the people we look for are highly adaptable and motivated people.
Awesome. Yeah. And obviously we get bank execs listen to the podcast. They've been guests as well. If they're interested in the Digizoo solution, is it best to reach out to you direct?
Yeah, reach out to me or our head of commercial, Paul Apolloni, so rob at digizoo.com.au, and we'll have a chat. We're being very careful about who we take on in the early days. We can't afford to make too many mistakes, particularly in this sector. It's a very limited market, so we need to nail it.
Well, Robert, it's been fantastic to have you on the show. Thanks for coming to see me here in Newcastle.
Thank you, Dexter. It's always lovely talking to you, and I do appreciate the work you do with getting good people. So
thanks, mate.
Thank you.
As always, folks, you can connect with me on LinkedIn. If you're coming back, thanks so much for your support. And if you're new to the show, make sure you give us a like and follow us on your favourite podcast player. Until the next episode, keep well.
Fintech Chatter is brought to you by Tier 1 People, leaders in fintech executive search. We'll help you bring in world-class leadership talent to build world-class fintech ventures. And you can find us at tier1people.com.